While the Russian war economy has been threatened by things like sanctions, labour shortages, and the occasional long-range drone strike, the Ukrainian economy has been under immense and often kinetic pressure, with some territories lost, facilities flattened, and workforces displaced. In 2024, the Ukrainian economy arguably finds itself wedged between competing pressures. It's a situation where you have billions of dollars in foreign aid and assistance flying in one direction, while salvo after salvo of Russian missiles and drones flies in the other. Amidst it all and the surrounding uncertainty, though, we can start to see hints of patterns emerging, with it becoming increasingly clear that Ukraine aims to prepare the country for another difficult winter, to lift defence industrial production to continue the war effort, and, at least to a limited extent, they and their allies plan to make Russia pay for it. So today, I thought it was time to look at the Ukrainian war economy in 2024, the pressure it's facing, the damage it's taken, and what contribution the economy is likely to be able to make to the Ukrainian war effort as the war continues likely into 2025. To do that, I'm going to ask a series of questions in sequence. What makes the Ukrainian war economy different from the Russian one? How is it actually going according to the main indicators? How is the war economy being financed and can the Ukrainian government afford it? What's happening in terms of major weapon system production? And then, getting to perhaps one of the greatest drivers of economic uncertainty in Ukraine, what has the effect of Russia's strategic bombing campaign targeting Ukraine's power infrastructure been? How effective has Ukraine been in defending against those sort of attacks? And what further damage might we expect? I'll then close out with a kind of bottom line view, looking at Ukraine's ability to sustain the war as it continues, and what that might mean for the negotiating power of both sides, and how the fighting ultimately ends. But before we get into it, let me welcome back a returning sponsor. As we've discussed before, the internet and modern telecommunications have made it easier than ever to get access to lots and lots of information. But with so much reporting coming in, you may want to have a tool that might help give you a more balanced perspective and a fuller picture. That's where today's returning sponsor and long-term supporters of the channel, Ground News, might come in. They provide a website and app that gathers related articles from more than 50,000 sources around the world to help you quickly compare how a given story is being covered. For example, if we look at two recent articles covering a Russian missile attack, this headline focuses on the casualties caused, the asymmetry of restrictions on the use of long-range weapons, and opens with a call for a policy change: let Ukraine strike back. The Russian source, meanwhile, frames this just as an effective attack against the Ukrainian armed forces. Unlike many of the other headlines, you won't see any mention of a hospital here. This sort of comparison might let you identify what sort of information different sources choose to elevate to the headline, as well as quickly see information on things like the ownership of that source, and assessments of political lean and factuality backed by ratings from 3 independent news monitoring organisations. Explore a little further and you'll also find features like the blind spot feed, which highlights stories that are disproportionately covered by one side or another of the political spectrum. And an example of where that might be useful is showing you stories that might only be covered by sources you wouldn't ordinarily consume. None of these tools is going to outright solve issues like distorted reporting or echo chambers, but it might help. And it's one of the reasons I'm very happy to have Ground News as long-term supporters of the channel. And so if you are interested, there will be a link in the description, ground.news/Perun, which will give you access to a 40% discount on their Vantage plan, which is the one which gives you unlimited access to all of their features. And so with my thanks to Ground News for their ongoing support, let's get back to it. So let's jump straight into looking at the Ukrainian economy and how it stands in 2024. In terms of the really major macroeconomic indicators, we have an easier time sourcing data for Ukraine than we do for Russia, perhaps unsurprisingly. While Ukraine's various allies have generally been very reluctant to risk the lives of their servicemen and women by sending them into Ukraine, economists are a different story. While militaries mostly hesitated in the name of things like escalation management or casualty avoidance, allied engagement on the economic side in Ukraine has been fairly continuous and extensive. The key driver here is that back in 2022, Ukraine inked a multi-year agreement with the International Monetary Fund for a series of payments to help support the Ukrainian budget. Now, as a country, unless you possess the Argentinian superpower of being able to borrow money, use it to juice the economy, default on the debt, and then somehow be able to borrow more in order to do it all over again, in order to get access to persistent IMF support, most nations need to agree to hit certain economic targets, undertake sometimes painful economic reforms, and of course to be economically monitored. Ukraine is very much in that latter category, and so we get regular reports like the one you can see on the right there that basically sets out how the Ukrainian economy is doing against its targets and whether or not it qualifies for the next round of payments. And because I don't believe in bearing a lead just to support viewer retention, I'm going to open with the summary findings and then dig into detail. The IMF's headline finding is that the war has had a devastating impact on the Ukrainian economy and society, but that overall, the economy is performing better than expected. In our video on the Russian war economy, we reflected that while the performance of some of the Russian military leadership probably left a lot to be desired, especially in 2022, the response to the economic side of the war by, for example, the technocratic leadership at the Bank of Russia was very effective and decisive. And in the IMF's view, clearly the economists as a whole have had a fairly good showing this war because they say the following of the Ukrainian response. Quote, "Skillful policy making, supported by external financing, has helped maintain macroeconomic and financial stability despite challenging circumstances, and the authorities continue to advance important structural reforms. Better than expected growth outturns in 2023 and Q1 2024 demonstrate the resilience of the economy." End quote. They reflect that after a sudden extreme contraction in 2022, the Ukrainian economy has been growing back faster than expected, and that growth is likely to continue into next year, albeit at a slower rate. They predict that Ukraine's fiscal deficit, that is, the government budget deficit, will remain large, but its reserves of foreign currency are expected to be stable, and despite the ongoing demands of the war and Russian attacks against Ukrainian economic and civilian infrastructure, they describe the medium-term macroeconomic framework as broadly unchanged from previous reports. In other words, even in the midst of a war and a concerted Russian strategic bombing campaign, the Ukrainian economy is growing. You can see some of those IMF figures for actual or projected real GDP change, so GDP change adjusted for inflation, shown on the chart in front of you. They have the Ukrainian economy growing by 3.4% in 2021, shrinking by 28.8% in 2022 as people flee damages done and territories taken by the Russian military, followed by a rebound of 5.3% in 2023, 2.5% to 3.5% in 2024, and then projected growth above 5% for both 2025 and 2026. That wouldn't be enough to get the Ukrainian economy all the way back to where it was in January 2022, but it would, if those numbers held, get it a majority of the way. Digging down one more level though, it's interesting to see what's going into these GDP changes and projected future changes, i.e. what is making up that GDP. What you have on screen here are the four components of GDP: private consumption, government spending, investment, and net exports, shown for 2021, 2, 3, and 4 according to the IMF data. And what you can immediately see is that different components of the economy did not respond in the same way to the invasion or the switch to a war economy thereafter. In 2022, the GDP collapse was overwhelmingly driven by massive falls in private consumption and investment. That makes a certain degree of sense. In 2022, who was going to put money into the Ukrainian economy to build a new factory or open a new cafe when you couldn't be sure how much of the workforce would remain, whether or not Russia would occupy certain territories, or whether your new business venture investment might be destroyed in a Russian airstrike? But the fall in real GDP was partially compensated for by a massive increase in government spending. That is, the government ramping up expenditure in order to, fund the war effort. In 2023 and 2024, though, the compositions of the growth we did see looked very different. Government consumption increased a bit as a percentage of GDP in 2023, and then was projected to actually decrease somewhat over the course of 2024. In other words, it wasn't a continued growth in the war economy doing a lot of the heavy lifting here. Instead, it was largely driven by a partial recovery in consumer spending and businesses and other investors being confident enough to take their money, put it in the field, and get stuff made. In terms of other key macroeconomic indicators, according to some of the latest data I could find, Ukrainian inflation is just above the 5% annual inflation target, certainly high by the standards of many wealthier countries, but well down from the peaks of 20 to 25% that we saw in 2022 and early 2023. In order to hold inflation down around that level, the National Bank of Ukraine is currently maintaining a key interest rate of 13% per annum. Again, and you'll hear this story a lot, up from pre-invasion levels, but down from their peak. Here I have three commonly referenced indicators: the official headline inflation rate, the central bank interest rate, and the 10-year bond yield, basically a representative of the borrowing cost for government. And for each of those indicators, the white bar is the United States, the blue is Ukraine, and red on the right is the Russian Federation. At time of recording, even if we take official Russian statistics as entirely accurate and the unvarnished truth, Ukrainian inflation is lower than Russia's, Ukraine's interest rates is significantly lower than Russia's, 13% to 19%, and at a little bit less than 12%, the yield on Ukraine's 10-year bonds is almost 4 percentage points below Russia's. Meaning if you have a like-for-like bond issue in line with these figures, the market is willing to lend funds to Ukraine more cheaply than Moscow. That obviously doesn't mean that everything is fine with the Ukrainian economy and the struggles of war aren't taking their toll. But nothing screams military superpower like invading your much smaller and less well-equipped neighbour, expend billions of dollars worth of weapons to seize their territory or attack their economy, only to have them, more than 2.5 years later, post better inflation and interest rate stats than you. As far as views within Ukraine's business community about what the future might bring, the current statistics basically point to meh. On that chart, 50 indicates neutral expectations, and so, remarkable as it may seem, at least at the aggregate level, Ukrainian business expectations in the latter part of 2024 aren't that far removed from where they were in the latter part of 2021, which says either some not very good things about the latter part of 2021, a degree of confidence that the economy will be able to persist despite Russia's best efforts, or some combination thereof. I want to dig one level further down though, because what those aggregate trend lines sometimes tend to miss is that the impacts of a war can be very different across different industries and sectors. Agricultural exports, for example, took a massive beating during the initial invasion, but by this point have undergone a significant recovery. What you can see on screen here is a chart showing those exports by month in millions of tonnes by the way in which Ukraine got the grain out of the country. You can see that initial switch to the use of a lot of railways, trucks, and of course the Danube ports in the early parts of 2022, followed by the impact of the grain deal, the collapse of the grain deal, and then the collapse of the Russian Navy in the Black Sea. There are plenty of battles and entire campaigns in Ukraine that are to some extent open to interpretation. It's not always immediately clear which side, if any, is getting the better of the fighting, what the balance of losses and resource expenditure is, and which side, if any, is achieving its relevant objectives. But on the Black Sea, this chart probably shows you everything you need to know. When the grain deal initially came up for renewal, you'll remember that Russia made a number of demands in order to agree to continue it. Negotiations subsequently broke down. Russia ceased to have any real control over the trade, other than that it could exercise militarily. And then in the face of Ukrainian drone and missile attacks, it has still, to this point, been unable to exercise that control. According to the IMF, Ukraine's exports along the Black Sea corridor are now well above what they were under the grain agreement, with all of the implications that has for the Ukrainian budget, Ukrainian farmers, food importers around the world, and the pride and self-respect of the Russian Black Sea fleet. But if you look at Ukraine's metallurgical sector, production of things like pig iron and steel, the production picture is nowhere near as rosy. Pre-invasion, Ukraine was a major exporter of ferrous metal products. It was a centre of the steel industry during the Soviet era. But the country has lost some of its largest relevant facilities, think Azovstal in Mariupol. And for the portion of this industry that is still intact and under Ukrainian control, the second problem is it's just so energy intensive. And in an environment where the Ukrainian power grid is the subject of continuous attacks, something we'll get to a little bit later on, if you're given a choice between running a blast furnace and the domestic heating for many, many Ukrainians in the depths of winter, you can understand why one of Ukraine's most immediate responses after a recent Russian energy strike, according to the IMF report, was to impose load shedding in what they described as, quote, a centre for the metallurgical industry, end quote. In other words, much as when we talked about Russia, you could argue that the Ukrainian economy is very much at least a two-speed one. Some industries, like those directly connected to the war effort, for example, may be doing comparatively well, while others are struggling. Overall, though, given the circumstances, the Ukrainian economy appears to be holding together relatively well, with two asterisks. Firstly, a lot depends on the results of ongoing military actions and the constant battle between Russia's missile force on one side and Ukraine's air defences on the other. The second is that Kyiv's ability to hold the Ukrainian war economy together to a great extent relies on a constant influx of aid and assistance from allied powers. As is fairly normal historically for a country engaged in a war like this one, the Ukrainian government's been running pretty steep budget deficits since 2022. That's been necessary for at least two key reasons. Firstly, to sustain the war effort, purchase equipment, pay troops, etc., and on the other hand, to stabilise the economy, provide for the civilian population, and support repair and rebuilding efforts. As the IMF phrased it, the 2024 budget remains the short-term policy anchor despite the risks, which is a way of saying that if something wonky or unexpected happens or begins to emerge with the Ukrainian economy, say for example sudden unexpected damage is done to a critical sector, the Ukrainian government budget has been one of the most responsive and effective tools at putting out those fires, both proverbial and sometimes actual. To be able to run those deficits, however, the Ukrainian government needs to be able to find that money somewhere. In 2024, the IMF estimated the total financing requirement would be something like $45 billion equivalent, which would be drawn from a variety of sources, foreign and domestic. In 2025, the financing requirement is likely somewhere between roughly $29 billion, which was the IMF estimate in June, and a more recent Ukrainian estimate of around $35 billion. At this point, plans now appear to be in place to meet the requirements at least through to the end of 2024, while funding plans for 2025 now probably account for a majority of the intended deficit, although the Ukrainians as recently as late August suggested there was still roughly a $15 billion funding gap. If you want to see at a glance how Ukraine is funding its roughly 20% of GDP deficit, there's a chart there from the IMF report on the right. Red is borrowing on the domestic bond market, the yellow external budget support grant, so gifts of money from Ukraine's various allies, and the blue is net external borrowing. Part of that blue bar is potentially a little bit deceptive, and there might be call for something like a green bar in the future to show the share of that borrowing that's on very generous terms. But it gives you a rough idea of what, at the time of report, the funding balance between these various sources was. And clearly the funding mix was sufficient to give the Ukrainian government at least some confidence in its financial resources, as the Ukrainian parliament met earlier this week to hike the 2024 defence budget by an additional $12 billion. Of that, Ukraine's defence minister estimated that just over half would go to the payment of soldiers' wages or payments to military families, while about $2 billion would go to top-up spending on military equipment and modernisation. But while foreign support has obviously been a decisive factor in enabling Ukraine to stabilise its economy, according to the IMF, they've also been substantially outperforming a lot of the agreed targets regarding their own budget and domestic resources. The figures you see on the right there represent a kind of report card from the end of March this year, showing the targets Ukraine promised to achieve for various targets on the left and what they actually managed on the right. Tax receipts were nearly 20% above target, foreign reserves larger than the target, and the projected budgetary deficit at that point, once the war expenditures were factored in, was less than two-thirds the maximum that had been agreed. One of the goals of targets like this is often to show foreign lenders and organisations that the country receiving that lending and support is serious about making their own efforts, even if those efforts are sometimes painful. And in that sense, Ukraine has almost universally overperformed. In many respects, the Ukrainians have also been going through the process of reforming the government and its economic institutions while there's a war on. We're talking everything from administration and oversight to tobacco taxation policy in order to bring Ukraine more in line with European Union requirements. But to go back to the core issue here, which is the funding demands that the war effort imposes on the Ukrainian budget, there are a couple of tracks of effort the Ukrainians have been running in parallel. Firstly, the domestic budget, finding ways to lift domestic budget revenues while finding cuts outside the bounds of military expenditure. At a macro level, that process has arguably been fairly successful. Ukrainian tax revenues continue to rise despite the pressures from the war, and the rest of the budget has been pretty thoroughly reshaped in order to accommodate military expenditure. That leaves the three external-facing tracks: debt renegotiation, seeking additional support from partners, and attempting to enlist the assets of another potential major contributor. That debt renegotiation process really focused on loans that Ukraine had taken out prior to the 2022 invasion. The bonds in question were denominated in foreign currency, so when the Ukrainian currency started to lose a lot of value owing to the minor economic disruption caused by the Russian invasion, a lot of this debt suddenly became much more difficult for Ukraine to realistically repay, or at least do so without impacting the war effort. The process arguably kicked off in 2022, and you can understand why some of Ukraine's current financial backers might have been pretty positive about the process. Telling your taxpayers that you're sending money to Ukraine to help it defend itself against an invasion or provide for its people is one thing, but for some unfathomable reason, I imagine that same public would be rather less supportive if they were told taxpayer money was being sent to Kyiv in order to protect the bond yields of pre-invasion investors. Just recently, that process finally yielded an agreement. At a high level, the investors agreed to take a roughly 37% haircut up front and restructure a lot of what remained. The upside is that Ukraine is expected to save itself roughly $11 billion over the coming 3 years, and a total of $22 billion out to 2033, which obviously has serious potential flow-on effects to what the Ukrainian budget can afford and how other potential lenders may rate the Ukrainian government's ability to repay. This obviously wasn't full forgiveness, but it did significantly improve the position of the Ukrainian budget going forward. The next track for Ukraine has been to continually seek additional funding from the various nations supporting them. In that respect, Ukraine has generally been able to secure enough to keep going, but not enough to start massively scaling up or outspend Russia or anything. According to the Center for Economic Strategy, between January and early September 2024, Ukraine received very approximately $24.5 billion in foreign financing. Of that, a strict majority, $13 billion, came from the European Union or various member states, followed in descending order by the United States, IMF, Japan, Canada, the United Kingdom, and Norway. I'll also note that while that chart uses blue bars to indicate foreign assistance in the form of loans rather than grants, a lot of those loan terms are about as soft as sorbet on a 40-degree day. Back in 2022, for example, a time when the Ukrainian economy was still very much in a deep state of shock, Japan started deploying one of its national superpowers, the ability to borrow money for basically nothing, and Ukraine ended up with some large loans on a 30-year term, a 10-year grace period, and a crushing 1% interest rate. I bring this up because I've seen some claims online that Ukraine's various allies are trying to debt trap Kyiv with all of these wartime loans, but I'd humbly suggest that if you're trying to debt trap someone with a 1% interest rate, you're probably doing it wrong. The chart on screen here shows Ukrainian expenditure requirements month on month, with the green bar showing how much money arrived from foreign sources in the month in question. As you can see, for most months over the course of the war, Ukraine has had to spend more to fund its budget deficit or debt repayments than it's received in foreign financing. But in some months, including the August just past, that green bar has exceeded the requirements, which helps smooth out the picture overall. An implication here is there is probably a constant, quiet debate going on in the background as to who should carry more of the cost of fighting off the Russian invasion. You might hear some Americans arguing that Europe should pay more, some Europeans saying that Ukraine should pay more, but in order to meet Ukraine's ongoing financial requirements, someone was going to have to pay more, and after extensive debate and diplomacy between Ukraine and its various allies, we saw an agreement between the G7 nations that there was a country that should be required to pay more of its fair share, and that was Russia. One strong piece of evidence for the suggestion that Putin probably didn't tell the Bank of Russia about his plans for Ukraine until it was all too late is that the Russians didn't repatriate hundreds of billions of euros worth of reserves before the invasion started. Those assets were then frozen, the overwhelming majority of them in Europe, where they've been sitting since 2022. There have been some calls for those assets to be seized and handed over to Ukraine, but so far the powers involved have resisted. There are some pretty serious legal, political, and diplomatic questions involved. Seizing assets is a major step, and one that might damage the confidence others have in how safe their money is being kept in your institutions in the future. Plus, as long as the funds remain frozen, they're a potential bargaining chip in any negotiation with Moscow. One where the G7 can potentially offer to sweeten or not sweeten any potential deal by offering to release or not release those assets. So what the G7 nations eventually agreed to do was to write some very large loans for Ukraine, but the financial burden here would actually be covered by the proceeds on those frozen Russian assets. Basically here, the theory is you can't or shouldn't seize the assets, but you can absolutely divert the billions of dollars in relevant interest. At time of recording, some of that funding is already being siphoned off in order to support the Ukrainian defence sector. The loan plan, it seems, is more of an attempt to convert that steady stream of returns on those Russian assets and convert it into a lump sum that Ukraine can use in the short to medium term. If this works, as announced and intended, it probably addresses Ukraine's financing needs at least through 2025. But before we move on, I want to attach two massive caveats to that statement. Asterisk one is that a lot of these assets are in the European Union, and there are certain risks that come with that. If you were the US government, for example, you might be concerned that one or more EU governments, say Hungary, for example, might decide to try and find a way to play spoiler when it comes to any planning regarding Russian assets held in the European Union. That's a topic that's been the subject of continuing European Union efforts in order to manage. And then there's asterisk 2. In saying that 35 or 45 billion euros is sufficient to back Ukraine through 2025, the assumption there is that it's new funding, that it's something Ukraine is going to get a benefit from on top of all of the assistance that has already been pledged by various states. One concern for Ukraine, however, is that you might start to see Treasury officials in various European nations, for example, look at this giant pile of money and say perhaps we can use that instead of what we've committed. In August, for example, we saw reports that German budget documents indicated that military assistance to Ukraine would fall from $7.5 billion in 2024 to €4 billion in 2025. And when this reduction was pointed out, some German figures objected to the characterisation, saying that military aid would continue. They just hoped it would be funded out of this $50 billion pool of money. Personally, I don't find that characterisation compelling, and for Ukraine, it's probably a very dangerous line of thought, especially if others try and imitate it. There is all the difference in the world between giving someone military assistance and paying for it out of your own budget, and asking that country to borrow money and then use it to buy your equipment from you. Both approaches are valid, they both have their place, But it's hard to characterise a world in which countries dial down their grants and expect this loan money to make up the difference as anything other than a reduction in the aid that government is giving. That approach would see Ukraine being more likely to tread water, so to speak, rather than trying to bridge some of the financial gap that currently exists between it and the Russian defence budget, and could significantly undermine the otherwise very significant impact they might have on Ukraine's ability to carry on the war effectively. Those concerns aside, though, the double bottom line here for the moment is probably the Ukrainian economy is stable enough and well-funded enough to carry on the war at least for the short to medium term. Even the IMF's downside scenario, which includes a lot of extra things going wrong for Ukraine, only sees their economy shrink by 1% in 2025, and the country's foreign exchange reserves fall back to roughly where they were in 2023. The country's debt to GDP ratio would increase to 121% by the end of 2025, which is high, but not out of the global ordinary, and a lot of that debt burden would take the form of concessional or softer loans. The reality seems to be that even if things take an unexpectedly bad turn, Ukraine has been able to raise enough resources domestically, along with pledges of future aid, to put it in a position where it can't outspend Russia, but it can stay in the fight. And carrying on the fight seems to be pretty core to the draft Ukrainian budget, which was reportedly approved earlier this month. Against reported proposed expenditures of $87 billion equivalent, $53 billion is reportedly earmarked for defence. Using the IMF GDP projections, that would put Ukrainian defence spending at a casual 60% of government expenditure and 25% of GDP. That's a level several times higher than what we've seen in Russia, and while it's obviously nowhere near enough to match the aggregate total of all Russian military spending, it does mean there's likely to be money in the budget not just to pay Ukraine's troops, but also to ramp up purchases from the country's growing defence industry. And so, just as with the video on the Russian war economy, that's where I want to turn next. Despite Russia's missile campaign, we have every indication that Ukraine's defence industry has grown considerably over the last 2.5 years. In late August, the country's defence minister estimated that something like $7 billion had been invested in Ukraine's defence industry over the course of the year to date. On one hand, $7 billion is a relatively humble figure compared to some of the defence industrial investments you might see Washington or Beijing make. But in the context of the Ukrainian economy, that sort of money can go a long way, even when it's divided between procurement and investment. A key observation here, though, is that while both Russia and Ukraine have both invested extensively in trying to build up domestic defence industrial capacity, the way they've done it and the way their industries look now are worlds apart. For one, in Russia, state-owned enterprises absolutely have the lead. If you see a modern, newly built Russian weapon system operating in Ukraine, as rare as they are amidst all of the Soviet relics, odds are you're looking at something manufactured by a company owned by Rostec, and the Kremlin owns Rostec. In Ukraine, however, the Associated Press report that about 80% of the defence industry is in private hands. Think everything from new, capital-intensive factories with modern equipment, down to small workshops or repurposed pre-war businesses. If you ran a small carpentry or metalworking shop pre-2022, for example, odds are you might just be in the military supply chain now. That approach naturally lends itself towards a focus on certain types of goods and certain modes of production. Ukraine has had a huge number of small workshops open up to manufacture small drones or components thereof, for example, for a couple of reasons. One, they're useful. Two, production isn't that capital intensive. You don't need massive robotic industrial equipment in order to assemble them or anything. A lot of the input components might be commercial off the shelf, which makes organisation and logistics easier. And the whole thing is just decently workable, even at a comparatively small scale, which is useful both from a startup perspective and because large networks of small dispersed workshops are likely to be much harder targets for Russian long-range missile attack. Even if Russia has a supply advantage in those systems, it probably can't afford to hunt hobbyists using hypersonics. That said, in 2024 we have arguably seen some consolidation and evolution in this model of Ukrainian drone production. Having lots of new producers with hundreds of drone models on offer does allow for new ideas to be rapidly tested and new productive capacity to be brought online. In a rough sense, assembling FPV drones was the 2023 equivalent of mixing Molotov cocktails in February and March 2022, something decentralised and useful that the government didn't want to tell people not to do. But going forward, I expect we're going to start to see the number of drone producers and also the number of models within every individual class of drone begin to consolidate, while more of the productive effort shifts towards a smaller number of newer designs. And I think that's especially true when you talk about Ukraine's constantly expanding supply of long-range one-way attack drones, an area where things are evolving so quickly that I expect we'll come back to it before long. In some respects, you can see some of those elements that are common in drone production appearing in Ukrainian ammunition production efforts as well. You have a significant degree of private sector participation. AP interviewed the owner of a small mortar ammunition factory in western Ukraine that's reportedly producing around 20,000 rounds per month. And just as with many of the drone production facilities we've seen, based on the image on the right there and some of the other ones from the included report, a lot of these facilities appear to have skipped investment in a lot of the soft edges you might see in other production facilities. You'll see a lot of images of workers out there that aren't exactly rocking the high vis, so to speak. Despite Russia's best efforts, every indication we have is that Ukraine has been able to significantly ramp up not just drone production, but also ammunition production over the course of the last 2.5 years. That's meant ramping up or re-establishing production of Soviet calibers like 152 or 125mm, and now we have indications that Ukraine has either started or will soon be starting to produce NATO standard 155 as well. For what are hopefully obvious reasons, none of the reports about 155mm production in Ukraine will show you a photo of the actual facility making it. That does make it hard for us to confirm the existence and estimate the productive capacity of any potential site, but given how frequently cruise missiles and drones appear in Ukrainian weather reports, it's probably an understandable step. There are some potential clues in announcements by German firm Rheinmetall, but we'll get to that in a moment. Because first I want to quickly look at one project that might allow us to get a very rough sense of the kind of scale Ukrainian industry is achieving or not achieving. The system you see there on the right there is Bodana. We've talked about it before, and it's a Ukrainian 155mm self-propelled howitzer. Think a rough analogue to the French Caesar, for example. In 2022, Bodana was basically a footnote in the Ukrainian artillery inventory. By the end of December 2023, it was being reported the Ukrainian military had about 30 in inventory, and by April 2024, Zelensky was claiming that the country was on track to produce 10 of these SPGs in that month alone. That would imply a significant increase in production rates, which has, at least in part, been funded by the proceeds on frozen Russian assets, indirectly making Russia one of the fastest growing contributors to Ukraine's defence industry. And if we look at the visually confirmed loss data, there is evidence of expanding production. Over the first 2 years of the war, more than half of Ukraine's visually confirmed losses of self-propelled guns were in the classic Soviet calibers, 152 and 122mm. The overwhelming majority of the rest were foreign 155mm systems or 120mm mortar carriers. 152 and 122mm systems are still very common, but they appear less than they used to, while Bodana has gone from being a barely noticeable proportion of losses to more than 10%, which is exactly what you'd expect to see if production rates had considerably lifted. Now, the obvious big picture caveat there is that even at 10 guns a month, that production rate is nowhere near sufficient to meet Ukraine's overall requirements. Based on the visually confirmed loss data we have, it is sufficient to replace the average number of 155mm self-propelled guns that Ukraine loses on a monthly basis, but we can be reasonably confident both that not all artillery losses in Ukraine come with a complementary cameraman and internet connection to ensure it becomes visually confirmed, and that Ukraine is losing a significant number of non-155mm SPGs, those old Soviet systems for example, that aren't currently being actively produced in Ukraine and that over the medium and long term probably need to be replaced with 155mm systems like Bodana. I bring this up because the SPG production effort is kind of a decent analogy for the Ukrainian war economy more broadly, at least outside some specific categories. It's been able to ramp up production and expand the types of systems being produced despite all the factories being in Russian missile range. But in terms of quantities, all it can realistically do in the short to medium term is take the edge off the overall requirement. With sufficient investment, Ukrainian industry can produce a lot and do so relatively cheaply and efficiently. I've seen a publicly quoted price for Bodana at $2.5 million per unit. When Denmark put up the funding to produce 18 of these units in Ukraine, it reportedly did so at around that $2.5 million per unit figure, which is significantly cheaper than a lot of the competitor systems out there. Yes, outside of wartime conditions, with more elements like a larger profit margin presumably baked into the price, that figure would likely go up. But it still suggests that, in this category at least, Ukraine is capable of building Western-style systems at generally competitive prices and ramping that up to a useful, if not overwhelming scale. But by itself, without significant assistance and investment, Ukraine simply doesn't have the capacity to produce all the materiel required by war at this scale. It is potentially capable of filling certain niche gaps, like producing long-range weapon systems that can legally be used against recognised Russian territory, unlike many Western-provided systems that have restrictions against being used in that way. But in terms of the overall, overarching hardware requirements, there's a gap. That's where ongoing foreign assistance comes in, and also potentially foreign investment. There's an observation to be made here that some defence firms have responded to the surge in demand caused by the war in Ukraine in very different ways. Some have basically ignored Ukraine itself and focused on ramping up capacity to sell into other more developed markets. Others have tried to build up additional capacity in proximate nations in the hope of then exporting into Ukraine. But a few have been willing to take the leap and invest in facilities within Ukraine itself. That kind of approach comes with some advantages in terms of lower logistics requirements to supply the front line and a lower cost base operating in a country like Ukraine, in exchange for a potentially quite sharp increase in the risk of missile-induced production disruptions. There are a couple of cases we could look at here, but for today's example, I just want to focus on one firm, Germany's Rheinmetall. Rheinmetall established a joint company with the Ukrainians back in October 2023, Rheinmetall Ukrainian Defence Industry LLC. Rheinmetall itself retained ownership of 51% of the new entity, and the Ukrainians 49%. And alongside the establishment of that legal framework, we've seen a number of distinct initiatives emerge. In order to help support various Western systems that have been supplied to Ukraine, Rheinmetall invested in building up a maintenance and repair capability in Western Ukraine itself that opened in June. They've announced plans to jointly build and operate a new artillery ammunition production facility in Ukraine, which is intended to produce an undisclosed six-figure number of 155mm rounds per year, including the propellant charges for those rounds. And according to both Rheinmetall and Ukraine, they're in the process of establishing joint production of the company's Lynx infantry fighting vehicle on Ukrainian territory. In terms of production complexity, combat capability, and NATO integration, that would represent a pretty massive leap for the Ukrainian defence sector, increasing its capacity to build desperately needed vehicles in the short term and potentially access European and foreign export markets in the long term. The big picture here is that Rheinmetall is one of those companies making major bets on Ukraine and its defence industry. The projects I just discussed already represent significant investments, and I didn't go through all of them. A lot of these programs may only really start to show their value in 2025 or 2026, but in the longer run, they represent a significant step towards giving Ukraine a greater capacity to sustain the war effort, at least from an industrial perspective. And on what I'm sure is a completely unrelated note, here's an article from July of this year reporting that US intelligence had warned Germany of a Russian plot to assassinate the Rheinmetall CEO, allegedly. Given the number of Rheinmetall announcements or press releases since that time, however, I can only presume that his response to this potential threat was to either ignore it or have a bit of an I am Iron Man moment and declare he was going to arm Ukraine even harder. Looking forward, Ukraine's defence industrial output probably hinges on a range of factors. There likely needs to be large amounts of additional investment, either domestically or foreign sourced, as the industry as a whole is still probably operating well short of its potential. There may be room for things like bureaucratic reform, better contracting, greater draft protections for critical military industry workers, and a suite of other steps that could all potentially compound together in order to generate more output. And then beyond all of that, there is the inescapable reality that in order to have factory output, you need to have factories, and those factories need to have power. And for years at this point, Russia has been employing thousands of drones and cruise missiles to try and deny Ukraine access to either of them. And so it's time to cover one of the greatest potential threats to Ukraine's wartime economy, besides a reduction in political will and assistance from its various allies, Russia's ongoing campaign of strategic bombardment, and specifically the targeting of the Ukrainian power grid. When we covered the Russian war economy, we said that one of the challenges it was facing was the continuous Ukrainian drone strikes against things like its oil infrastructure. And so when talking about the Ukrainian economy under wartime conditions, it's impossible to ignore the equivalent Russian effort. And despite some cursory similarities between what both sides are attempting to do, there's a lot that sets the Russian campaign apart. For Ukraine, long-range one-way attack drones overwhelmingly make up the damaging mechanism of the long-range strike campaign. For Russia, drones like the Shahed or the newer A1 are significant and a major draw on Ukraine's air defence systems, but in terms of sheer volume of explosive delivered to target, it's the cruise and ballistic missiles that are doing a lot of the damaging work. Ukraine does have a limited number of equivalent systems available from its various Western supporters, but not permission to fire them into recognised Russian territory. Russia, unlike Ukraine, also has a significant force of strategic bombers which have done consistent work throughout the campaign, and what that comparatively large strategic bomber force allows Russia to do is not just launch air-launched cruise missiles, but launch significant numbers of them at the same time in order to launch large-scale saturation attacks. Ukraine can air-launch Storm Shadow missiles, but even if it had an infinite supply of them suddenly, it doesn't have the airframes to lift 100 of them into the air at the same time. And so while reported Ukrainian usage of cruise missiles has generally focused on small individual strikes, we've seen repeated a number of times now a pattern wherein Russia will stockpile cruise missiles and then put large numbers of bombers up in parallel to launch a simultaneous saturation attack against multiple targets, often all across Ukraine. That may have been more or less what happened in late August, where we saw what may have been the largest Russian combined long-range drone and missile attack since the early weeks of the invasion. The Ukrainian report was that 127 missiles were fired, alongside 109 long-range one-way attack drones, with at least some of the targets, based on the damage we can observe, the flight patterns of the missiles as far as we understand them, and the Ukrainian reporting, being parts, once again, of Ukraine's energy infrastructure. We first talked about this particular Russian targeting choice, going after the Ukrainian power grid and power generation as far back as 2022. But the fact they are still going after these targets now, in the second half of 2024, suggests that at least some in the Russian command must see value in this particular target set. It probably helps, of course, that the Russian system in general is often at its best when it's dealing with static, easy-to-identify targets. You can't really hide pre-war infrastructure with a known location, nor are power stations particularly known for their agility or capacity to evade incoming fire. It's important to stress that power and generation infrastructure aren't the only targets that Russia appears to go after, but if we're concerned with the state of the Ukrainian economy and its ability to carry on with the war, it's probably one of the more important ones to focus on. So to understand the potential impact of this Russian strike effort going forward on the Ukrainian economy, we need to look at a couple of points in sequence. Firstly, we need to understand the Ukrainian power grid and how much damage it's taken so far. Then we need to look at the Russian effort. How much ordnance have they used to achieve those effects against the grid, and what is the role being played by Ukrainian defence systems? Then going forward, we need to ask whether there's likely to be any major changes in Russia's offensive or Ukraine's defensive capacity, and what that might mean for Ukraine's ability to hold the grid together, at least to the minimum necessary degree. In terms of its characteristics as a potential economic target, there are strengths and weaknesses when it comes to the Ukrainian power grid. On one hand, a lot of the technology used is relatively old, often Soviet-style hardware. That can mean that sourcing replacement components, for example from power generators in Western Europe, can be a pretty difficult affair. And so regenerating the grid after damage is taken can be quite a long lead time process. Instead, a lot of the viable parts donors are going to be older facilities in, for example, Central and Eastern Europe. On the other hand, compared to Ukraine's current needs, the Ukrainian power grid pre-invasion was massively overbuilt. The Soviets intended Ukraine to be a major centre of industry, and the country is still a home to some very energy-intensive sectors like steelmaking, for example. What that means is even if a lot of generating capacity was occupied or taken offline, there was still a lot in the system relative to the basic needs of the Ukrainian economy. And you can see that flow through in some of the assessments the IMF made of the Ukrainian power grid earlier this year. At the time, they assessed that Russian strikes between March and May had affected something like 9 gigawatts of generating capacity, and that overall, Ukraine had lost about 80% of its thermal power plant capacity and about 40% of its hydro capacity. But despite that, electricity production in April was only down 11% year on year as, quote, the system usually operates below full capacity in this period, demand remained seasonally low, and nuclear power generation, over 50% of the total, remained intact. The headline assessment at that point was that after almost 2 years of bombardment, the energy deficit in Ukraine in 2024 was going to be around 10%, falling slightly in 2025, and then being resolved entirely by early 2026. That assessment assumed that certain regenerative activities would take place, like the installation of some smaller gas generators to provide additional capacity, and that household and industrial consumption would be restricted, especially during peak periods, like the depths of winter. The reason additional gas generators are mentioned as a potential solution is that that's one thing Ukraine still has in relative abundance. According to the IMF, Ukraine didn't need to import any natural gas during the 2023 heating season, and with some of Ukraine's underground gas storages being as much as 3 kilometres below ground, unless the Russians find a way to load diglets into a missile, they're likely fairly safe against almost any potential Russian attack. The caveat in all that assessment, though, was the warning that, quote, additional attacks would further destabilise the energy system, end quote. And in recent months, additional attacks have absolutely been forthcoming. Additional strikes have left Ukraine in a kind of energy race, as they move to reconstitute the power grid as rapidly as possible, while on the other hand, the peak demand of the winter heating season is getting ever closer, and Russian strikes remain a constant threat. Some recent reporting I found indicates that Ukraine is currently consuming around 13 gigawatts. The peak last winter was 18. And so to try and understand how the Ukrainian power grid might react this year to those sort of demands in the face of continuous Russian strikes, we need to pivot to looking at the kinetic side of the picture, the missile strikes themselves and the ongoing air defence effort. So what I want to do then is break the Russian drone and missile campaign up into two components: the air defence challenge it's posing on one hand, and the damage to the Ukrainian economy on the other. Ukraine's air defence problem is at the same time both intuitive and extremely challenging. Russia has proven willing to target power generation and transmission infrastructure. That infrastructure, out of necessity, is spread all across Ukraine. Ukraine is a very large nation, and so the demands for air defence systems in the face of that kind of campaign can mount very, very quickly. If you want to prevent an attack destroying a particular power plant, for example, a number of questions have to be answered the correct way in sequence. Firstly, is there a system or collection of systems in a position to defend that site against the particular attack, noting that Ukraine does not have enough air defence systems to cover every potential target? If you have a system in place, is it the correct system to deal with the incoming threat? Skynex cannons with specialised ammunition might absolutely shred a drone attack, for example, but be completely useless against ballistic or hypersonic missiles. A Patriot battery stocked with PAC-3 missiles would be the perfect answer to a ballistic or hypersonic attack, but very poorly suited from a sustainability perspective to deal with those same incoming drones. An orthodox answer there would be to layer your air defence systems so you have multiple options available depending on the incoming threat, but that requires imposing an even greater draw on already overstretched air defence resources. And even if you have the right tool for the right job in the right place, it may still all end badly if you don't have enough of that tool in place. If your defending battery has enough interceptors to deal with 16 cruise missiles and 20 end up incoming, the attackers are probably going to take home the trophy and the air defenders the participation award. No doubt fully aware of the damage being caused and the brutal reality of this sort of arithmetic, back in July, Ukraine announced that it wanted to double its air defence capabilities over the course of the summer. A lot of that focus was placed on the build-up in the number of Patriot batteries, but other systems were involved as well. And based on our observations to date, I think there's reason to doubt that even doubling Ukraine's then current air defence capabilities would really be sufficient to fully meet the challenge, even if it would be a major improvement. One piece of data which might give us a bit of a clue as to the scale of the Ukrainian air defence challenge and how many Russian missiles have been committed to this effort or may be committed to it in the future is some data the Ukrainians chose to release in the latter part of August. This was part of a PowerPoint briefing being given by General Sitrsky that was released to the public, which gave Ukrainian claimed figures for the number of Russian missiles and drones fired against Ukrainian targets since February 2022, how many of those have been intercepted, what sort of targets they've been fired against, and in the case of missiles, what sort of subcategory of missile was involved. I need to stress again that these are figures the Ukrainian military has indirectly decided to release to the public, and so the way we use and evaluate them should bear that in mind. I would tentatively suggest, for example, that they're more likely to overestimate the number of intercepts being made by Ukrainian air defence systems than underestimate them, although obviously in nowhere near the same way that we've sometimes gotten used to with Russian air defence systems. This, for example, is Russian Governor Igor Rodenya, the man in charge of a region including Toropets and a very, very large ammunition depot, who said that in a recent Ukrainian drone attack, all drones had been shot down, but some fires had been started by falling debris. And this is an image of the fire in question. Notice the mushroom-shaped cloud form of the primary explosion, coupled with the fact that NASA's satellite-based FIRB system has detected massive heat signatures across an area encompassing 15 square kilometres, all of which is obviously consistent with the falling debris story, as opposed to a drone, I don't know, cooking off a massive ammunition stockpile. The points here are probably A, ammunition storage safety absolutely matters, and B, it's possible for government officials in the midst of a war to give potentially less than accurate evaluations of air defence performance. But so far as the Russian strike campaign goes, these are the numbers the Ukrainians gave us. Since February 2022, the Russians have reportedly fired approximately 9,600 missiles of the selected types and 14,000 long-range one-way attack drones against Ukrainian targets. Of those, 2,429 missiles and more than 9,000 drones have been intercepted, leaving 11,879 targets that were not intercepted. Of those systems that were not intercepted, 6,200 are believed to have been targeting civilian infrastructure and 5,676 military targets. At a macro level, there are a few statistical points that immediately jump out. The first is that if you smooth that data over approximately 30 months of war, you end up with the Russians firing on average a bit over 300 long-range missiles per month, or closer to 220 if you pull out surface-to-air missile systems like S-300. Drone usage is a bit under 500 per month. It implies that a strict majority of attack drones are intercepted by Ukrainian defences. For the missile categories as a whole, the number is closer to 25%. Finally, it implies that of the incoming that isn't intercepted, it's a roughly 50-50 targeting split between civilian infrastructure and Ukrainian military targets. What you can see on screen here is a chart showing the number of Russian missiles the Ukrainians included in that dataset, their type, and then for each missile fired, whether it was intercepted or not intercepted. And what immediately stands out to me is that in the Ukrainian data, the most common type of missile in the dataset, and also one of the least often intercepted, isn't any form of cruise missile, it's surface-to-air missiles. Think things like S-300. The next most common category are the ones I'm calling subsonic long-range systems. Think things like Caliber or the 101, with just shy of 3,000 missiles fired and just shy of 2,000 claimed interceptions. So, okay, you might think subsonic missiles traverse slower than surface-to-air missiles in a ground attack role, so the interception rate is higher. That makes a degree of sense. But that's immediately thrown out the window when you look at the next category, short-range subsonic missiles. Think things like the KH-59. This is a category with more than 1,500 missiles fired, but a much lower claimed intercept rate than their subsonic equivalents. You then have tactical ballistic missiles, think things like Iskander, followed by supersonic long-range missiles, which are much rarer in the weapon mix. This is systems like Onyx, for example, which is originally an anti-ship missile, but also a much lower intercept rate. But before you rush to write a blanket rule that says faster missile gets shot down less often, Russian hypersonic missiles, even faster than their supersonic systems, actually have a higher number of claimed interceptions by Ukrainian air defences than the much more common supersonic systems. Now, it might be tempting to throw the data out as obviously wrong or suggest that, hey, maybe the Kinjal is just not a very good missile compared to some of the older supersonic systems. But across the board, I think this is more an illustration of the fact that when it comes to air defences and the effect on the Ukrainian economy going forward, context can matter. So, assuming for a moment these results are at least somewhat reflective of reality, what might be going on here? When looking at that data or equivalent data, there's at least 4 questions I'd suggest you ask. Firstly, for each category of attacking missile, what sort of targets in Ukraine are the Russians likely firing it against? Then, of everything on that Russian target list, what is Ukraine choosing to commit its limited resources to defend? What are those defences at each location capable of intercepting? And then, in an environment where Ukraine is very constrained on air defence ammunition, what incoming are they choosing to attempt to intercept? The basic argument here is that Ukraine is so constrained on both air defence systems and air defence ammunition that it can only afford to provide the greatest degree of protection to a very narrow range of targets, and then to only expend that ammunition against the most grievous of potential threats. So if you take a higher-end Russian missile system with good performance characteristics and fire it against what is likely to be a well-defended target, like Kyiv, and you compare that against a less capable system, but one that's fired against a target that's likely to have minimal defences, you could very well end up with a data set that seems to suggest that good is bad and up is down. Kind of like comparing the top speed of an F1 car with a go-kart, only the go-kart gets to drive on a freeway, while Lando Norris has to record his test time on a sand dune covered in anti-tank mines. And so if we start asking those 4 questions of each category, we can start getting an idea of what may be going on, albeit with a very limited degree of confidence. For example, by their very nature as tactical or shorter-range systems, you would expect Russia's TBMs and shorter-range missile systems to be used primarily against targets that are tactical in nature and possibly closer to the front line. And all else being equal, I would probably expect those forward targets to be less well defended than the Ukrainian capital or cities deep in the Ukrainian rear, which is exactly the kind of places that subsonic long-range cruise missiles, thanks to their longer range, might be tasked against. So at least in terms of air defence challenge, the Russian short-range missiles and TBMs might be facing an easier opponent, and then within that context, we see a much lower intercept rate for the TBM as compared to the short-range subsonic cruise missile, which might suggest, shockingly, that within that shorter range bracket, the harder-to-intercept system tends to be intercepted less often. That, along with a relatively small sample size, may also explain that data outlier with the hypersonic systems, where the claimed interception rate is higher than for supersonic ones. On at least some of the occasions where we can be relatively confident that Kinjal was probably used by the Russians, the targets in question tended to be those that you'd expect to be relatively well defended. Indeed, one of the believed targets for the missile appears to have been a Ukrainian Patriot battery in Kyiv itself. If you are trying to set up a situation that maximises the odds that your missile gets shot down, firing it at the enemy's most capable air defence system is probably near the top of the list. You almost guarantee that you'll be facing a capable system, that they will choose to fire on you in order to defend themselves, and you also open up the possibility of things like being intercepted in the terminal phase because you're not doing a high-speed flyby of a defense position. You have to go to the point where distance equals 0 in order to get the job done. The key here is that if you're trying to model how many Patriots or SAMPTs it might take to defend Ukraine's critical infrastructure, I wouldn't be so quick to assume that anything inside a Patriot's hypothetical range of engagement is likely to be shot down, even if it's a hypersonic missile. I think in most cases, the modelling has to assume the launcher will not be parked on the roof of the power station being defended, and the intercept problem is slightly more complicated as a result. The final interesting standout to note in the data before we get into the so what phase is the massive presence of those surface-to-air missiles in the Ukrainian dataset. The most obvious culprit when you see that is the Russians using S-300 air defense missiles toggled into a ground attack mode. This has been reported extensively at different points during the war, especially targeting, for example, Kharkiv and other targets relatively close to the front line. And while the older S-300 missiles, which you imagine are the ones more likely to be used for this assignment, are still going to have smaller warheads than most cruise missiles and a greater degree of inaccuracy against ground targets, it is still at its heart an air defense missile with all of the performance characteristics that entails, and it is going to rip in towards the target at very high speed on a challenging trajectory. That combination lends itself towards being fired at shorter range targets, which are less likely to be well defended, combined with a smaller warhead, greater inaccuracy, and very challenging flight profile. All of which suggests that if there was a missile the Ukrainians were going to let through to the keeper, so to speak, rather than commit an interceptor missile against, this would probably be near the top of the list. A quick note that I still see some sources online saying the Russians can't do this or don't do this, or that S-300 doesn't support this sort of functionality. And that's presumably why years ago, Russian state media reported on the Russian military integrating S-300s used in the land attack role into major military exercises. Especially when you're talking about militaries, something being expensive and wasteful doesn't mean it's not possible or doctrine. Okay, so how do we interpret that data and what else we know in the context of the strikes against Ukraine's power infrastructure and the forward impact on Ukraine's economy? The three elements I'm looking at here are strike frequency, intercept frequency, and the trajectory of both. We now have a rough upper limit for the scale of these strikes, based at least on the Ukrainian figures. Since power grid strikes would fall into the civilian category, so 6,203 in total, up to late August, but then only represent a subset of those hits, and usually those with particular systems. We would expect long-range missiles and drones, for example, to be more relevant against a lot of energy industry targets than the shorter-range ones more likely to be used closer to the front. Complicating the modelling here is that any damage to Ukraine's power generation infrastructure is unlikely to be linear. A thermal power plant that's been comprehensively struck 3 times might be more than 3 times more difficult to repair than one that's only been struck once. You might run out of spares, ad hoc solutions, and engineering miracles. But there's also, at least for the moment, a couple of things that still provide a floor for Ukrainian power generation. For one, more than half of the country's electricity generation pre-invasion came from nuclear reactors. The country currently has 15 operable reactors, 6 of which are under Russian occupation at the Zaporizhzhia nuclear power plant. There's a map on screen there showing where the remaining VVER-1000s and the smaller 440s are positioned in Ukrainian territory. So far, while Russia might have been willing to attack transmission infrastructure that enables these power plants to do their job, they haven't been willing, it seems, to openly cause an international nuclear incident by attacking the plants themselves. Something that, by international agreement, is very, very high up the list of things you are not meant to do. That suggests that even if every thermal power plant in the country was comprehensively atomised by Russian airstrikes, you still have a base generating capability that you can't really take offline, at least not without quite literal nuclear escalation. Ukraine is also somewhat connected into the European power grid, which historically has mostly been used to export Ukrainian electricity to countries in the European Union, but recently has been switched into reverse to enable Ukraine to become an importer. Ukraine was actually in a position to export some electricity during the Q1 of 2024, but recently the focus has instead been on import capacity and what it might mean, especially for winter. Here again, Russia can try and target transmission infrastructure, but the generation capacity itself is probably a flaw. The relevant generators are in Europe, in NATO countries, and so you'd expect there to be some pretty deep consequences if they ever made it onto Russia's target list. But this energy umbilical, according to the CES, is really only good for a maximum rate of about 1.7 gigawatts, with, as of July, Ukraine using somewhere between a half and 2/3 of that capacity, enough to top up nuclear, hydro and renewable generation, but certainly not enough to run the entire country. And so from a strategic perspective, arguably even if Russia destroys all politically acceptable energy generation targets, if you try and roughly tally up what's left, you can get a number, provided the transmission infrastructure is there to get the power where it needs to be, not that far below what Ukraine is currently using. What you can't do is get to the levels we've frequently seen during previous winter peaks. That would suggest an upper end of what Russia can achieve with its current strategy and rules of engagement as a world where Ukraine has enough energy to limp along and operate as it currently is, but faces some incredibly tough choices about things like prolonged blackouts or industry shutdowns during the peak demand of the heating season during winter. To greatly oversimplify, you can imagine come winter, Ukraine having to make the choice between allowing steel smelters to go cold or people's homes to do the same. One unknown is the future of Ukraine's air defence capabilities. What additional systems do they receive? How much ammunition for them? And then how do they balance those available resources between protecting critical infrastructure and reinforcing the front line? Unknown too is the future Russian target set. Do they choose to pull back on energy sector strikes at some point? Or alternatively, do they expand the target list to include those that are much more legally and ethically fraught? In overly simplistic terms, you are not allowed to target nuclear reactors or hydroelectric dams. In both cases, the potential for collateral damage in the event of a successful strike is obviously massive. The destruction of a dam could cause horrific flooding, the destruction of a nuclear power plant a radiological disaster. But just because it isn't legal doesn't mean it's impossible or even without precedent. This war has already seen the Novokakhovka Dam destroyed, videos emerge of a Russian missile sailing into the water near the Kyiv Dam, and for all the international rules and norms that prohibit targeting this kind of infrastructure, international rules and norms also prohibit invading your neighbours. And yet, here we are more than 2.5 years into a Russian invasion. The third unknown are the Ukrainian people and Ukrainian enterprises. How prepared are they for another energy crunch in the coming winter, and what are they willing to endure in order to avoid surrendering to Russia's demands? When we try to quantify the effect of these Russian strikes on the Ukrainian power grid, often we end up with some quite sterile statistics. $16 billion worth of direct damage to infrastructure, $40 billion in lost revenue, X percentage of capacity taken offline. But it's important to remember that what those numbers reflect are very real impacts on millions of people still living in Ukraine. It might mean heating is off much of the time when it's below freezing outside. It might mean, as it has on some occasions already, that water stops pumping because critical infrastructure has been hit or no power is available. Anecdotally, speaking to Ukrainians, a lot of the people that have the resources to do so are much better prepared for power cuts this year than they have been in the past. At a national scale, there is always going to be at least some electricity available, and people have put a lot of effort into preparing as best they can. And you could argue that what Russia is essentially doing is gambling by continuing to commit precision-guided weapons against this kind of infrastructure in the hopes that just that little more pain, that little more suffering, that little more pressure will cause the Ukrainian public to decide to support concessions, despite having given Moscow the diplomatic equivalent of the middle finger for more than 2.5 years at this point. From a strategic perspective so far, this hasn't worked, while also consuming a lot of Russia's capacity to launch long-range precision strikes. But it's worth remembering that it's always possible for damage to compound over time, and that even if the Ukrainian economy and people broadly have what they need to carry on through the winter into next year, that doesn't mean that all members of the population have the resources necessary to prepare properly, nor that life isn't going to be very, very hard for a significant number of people. I bring this up because I think it pivots us pretty well into a discussion of the big picture, and that is that by historical standards as a war economy, the Ukrainian one is in pretty good shape. Military production is expanding. Interest rates and inflation are below Russian rates. The economy is continuing to grow despite the challenges caused by the war. Unemployment rates are significantly higher than in Russia, meaning Kyiv is probably less likely to have to deal with that kind of labour squeeze scenario that we talked about previously. And that as far as power generation goes, despite Russia committing enormous amounts of ordnance to the task, it's hard to see a practical way for Russia to do enough damage in the short to medium term to actually shut the economy down properly. Significant amounts of generating capacity, like nuclear or imports, can't be directly targeted. And while we have seen some industries deal with significant load shedding, military production, at least for the moment, still appears to be going up. In that respect, the Ukrainian war economy is intact and likely to remain so. As long as foreign powers continue to maintain their support along current patterns, there may not be enough funds there for Ukraine to match the Russian budget, spend for spend, but the budget itself can likely be sustained while GDP continues to slowly recover. The caveat, of course, is that just because a war economy is functioning doesn't mean it's in any way pleasant for the people living in it. Blackouts, cold winters, higher taxes, and lower social spending are all prices the Ukrainian population are having to pay to carry on this fight. And so far they've proven willing to do so, rather than accept Moscow's very long list of demands. I think one of the closing takeaways here is that the Ukrainian war economy can probably hold together as long as the will of the Ukrainian people and the political will of its various backers hold together. And, of course, whether the country gets the specialised resources it needs, like air defence systems and munitions, to hold down the effectiveness of Russian long-range strike activity as Ukraine prepares for yet another, no doubt very hard winter. And okay, channel update to close out, I'll keep it brief. Firstly, I did want to release this episode fairly soon after the one on the Russian war economy, because in many ways they're two sides of the same coin. In a sense, Russia and Ukraine face very different challenges, with Russia having an inherent resource advantage but needing to fill most of its requirements itself, while Ukraine has access to fewer domestic resources but has a lot of pressure to use those resources effectively in order to increase the odds that it receives continuous support from its various allies and supporters. What I hope came through is both how resilient modern industrial economies can be, even under harsh wartime conditions, and that secondly, economic assistance to Ukraine, much like military assistance from its various supporters, has fallen broadly into the just enough category. Ukraine is receiving enough broadly to maintain the budget and hold the country together while expanding defence production to at least some degree, but it isn't receiving enough to really maximise its defence industrial potential. The why of that is probably a question for another time. Today, I just wanted to focus primarily on the what. In terms of broader channel updates, as I noted last week, there will be a slower cadence of releases on Peru Gaming, at least for the next couple of weeks. Then I hope to move back to 2 episodes a week, fingers crossed. And I wanted to extend my thanks again to all of the patrons who've posted potential questions for a Q&A episode on Patreon. I'll be reviewing all of those in the coming days and then start to shape up a potential episode. Thank you again, all of you, for your ongoing support and engagement, and I do hope to see you all again next week.